Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sharif Daramola, and for the next 30 minutes thereabout, I'm going to be your host as we will be taking a trading journey into the financial landscape using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action in the nearest future. The Since the beginning of the week, we have been monitoring three major financial assets, which I actually did a video on during the course of the weekend. And since yesterday, we have been running through these particular assets, trying to see how we can capitalize on any potential opportunities. And these assets are the USOILSPOT, the XAUUSD, my favorite, and of course the newly added USD JPY into our watch list for this week. And in fact, the last 24 hours has been a little bit sluggish, if you would ask me. Though we had some momentum on the USOILSPOT, we saw our price came back into entry point. And on the XAUUSD, we saw a little bit of choppy situations going on that one, except for the USD JPY, which has really gained some traction since the beginning of the week, and it appears that price will continue to maintain that momentum. Today we will be looking into the structure to see how we intend to position ourselves in such a way that we can capitalize on any potential move today. So I encourage us all to stay tuned in so that you don't miss out on any of the valuable ideas we will be deliberating on today. To start with, I would like to first of all acknowledge the newcomers in the house. For those of us who do not really understand what this is all about, well, first of all, I would like to state here that I usually share a couple of videos during the course of the weekend, which of course lays the foundation for the new week, where I do illustrate what I think what I think about the market based on the asset we are looking at. And the Forex Morning Mastery was born out of the necessity to do follow-up details on these assets on a daily basis. So as technical traders, we usually gather here every day as a community and engage in follow-ups and reviews of our current trading positions, if we have any, in anticipation of both the London and the New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. My aim here is to equip you with the knowledge and skills necessary to make your own independent trading decisions. And of course, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions and strategies. So once again, I welcome you on board and encourage you to engage in the comment section. I see a couple of comments. I see you, Ronald Kalnin. Good morning to you. Raja BD, trust you're doing very well. Good morning to you guys. You guys are just wonderful. So, with that being said here, we shall be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting this market sentiment today. And of course, you know how we do it in this community, especially for those of you who have been with me for a while. You know how important it is. These fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, right into the economic calendar, based on the assets we have been monitoring since the beginning of the week, we shall be focusing on high impactful event from both the United States and the Japanese economic docket. Now, so far this week, and based on today's trading session, we do not have any high impactful event. That is today, Tuesday, January 16th. So what I will do here, so that we can at least have an insight into what may be serving as a catalyst for market sentiment today, I would like to include the medium impactful event, and let's see what we have here. Now, included in medium impactful event, we have a couple of economic features from the United States, which we will be looking out for. The first one is coming up in about 5 to 6 hours from now, and that is the New York Empire State Manufacturing Index. Now, for those who don't know, this is a survey conducted by the Federal Reserve Bank of New York, and it gauges business conditions for New York manufacturers. Now, generally speaking, a positive result indicates a bullish for the US dollar, while a negative result shows poor growth in the economy. Now, looking at the previous data that came in for the month of December, you will see that it came in at a deficit of 14.5. Now, based on what is on ground right now, we can see economists projecting a deficit of 5 for the month of January. Now, what this simply means is that things have improved a little bit, and we're expecting a little bit of expansion in the manufacturing sector of the New York economy. So let's see what the actual data will be on this one. Will it be just as expected, below expectation, or even beyond expectations? Then later on today, we will be looking forward to a speech coming in from Christopher J. Waller. Waller is the member of the Board of Governors of the Federal Reserve, and of course is also serving as an executive vice president and director of research at the Federal Reserve Bank of St. Louis prior to his Fed board appointment. Now, he's going to be giving a speech today, and of course, we all know what is going on in the market right now as regards to the anticipation of a rate cut as early as the month of March. And of course, we also saw some data come in last week, both from the CPI, which came in beyond expectation, throwing a clog into the wheel of the expectation of a rate cut. Then we saw on Friday the PPI data came in below expectation, and majority were even thinking, okay, fine, with this information we have, we might likely be seeing a rate cut as early as March. However, there was a speech by one of the Federal Reserve officers during the course of the weekend, where he emphasized that the Fed needs to be very careful before cutting interest rate, as this may likely increase the inflation in the U.S. economy. So these are very, very contradicting informations, which is giving everyone, putting everyone in such of a dilemma as to what the Fed is likely going to do. So because of this whole scenario, majority in the market will definitely want to scrutinize what Christopher Waller is going to say today, and whatever he says will definitely give us an insight into the monetary policy outlook of the Federal Reserve and potential interest rate trajectory for the year 2024, and of course also give us an health situation of the US economy as well. So with all the information we have gathered here on the economic calendar, we shall be diving right into the business, and we do know that the anticipation of this event often manifests on the chart in technical patterns and price movement. And by understanding this, what we are going to be doing today is to see if we can identify patterns or structures that we will be using to guide our trading decisions for today. So as usual, the first asset we will be taking on this morning is going to be the US All Spot. Now, on the US All Spot, we have quite an interesting situation gradually unfolding on this chart. And this morning, I saw something very beautiful that we can actually use to position ourselves strategically for the next move today. And of course, I did give an update on both my Trading View and Telegram platform. And for those of you who are with me on this platform, you definitely must have gotten an update on how we are going to be managing our positions today. Well, the last 24 hours has been quite interesting. For those of us who were here during yesterday's live session, we did acknowledge the fact that price action was confined within a range right here on the 1 hour time frame to further emphasize the level of indecision that has gripped this market after price ranged within the $73 level and the $72.40 area for the first 7 to 8 hours of the week. And of course, whenever we have this kind of situation, we usually exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, with the situation we had here, we saw how price broke down the support line for the first time, giving us our first sell position for the week. And we saw how price went on to break down the $72 area to further emphasize some level of strength in this bearish market. Now, and of course, I do hope we moved our stop losses accordingly, as we normally do whenever price action moves significantly well in our favor. So we saw price move about 100 pips, close to 100 pips on that first sell position yesterday, and from the second sell position we saw price move over 60 pips before the bullish momentum came in, taking us out of all that sell positions at that point. And with the situation we have here, considering the fundamental factors behind the scenes, we saw some buy pressure resume, and throughout the Asian session it was more of attempt by buyers to push price to the upside. As you will see, price continue to find buy pressure around the $72.40 area, which happens to be the first support line for the week throughout the Asian session. Now, if we consider the fundamental factor, let me say the economic situations as regards to the US All Spot, we all know that there is an ongoing concerns in the energy market as the Yemen Houthi movement announces plan to broaden the scope of their targets in the Red Sea and potentially impacting the U.S. vessels too as well. And now this announcement, coupled with the Israel-Gaza situation, may likely escalate further. And currently the market exhibits a bearish trend even despite all of this. But I still think that based on what is going on behind the scenes and the concerns as regards to the disruption of oil or global oil, it is very likely that price will climb to the upside. Now, if we look at things from a technical standpoint and looking at what has been going on here since and now, before I even go further, I would like to emphasize that for those of you who had missed my video on the US All Spot at the beginning of the week, where I did a top-down analysis on this asset, I encourage you to go ahead and watch that video after this live session so you can have an holistic, a background knowledge of what went on and how we were able to identify the key levels and patterns we are using to guide our trading decisions for the week. As the Forex Morning Mastery, we only deliberate on the 1 hour time frame. The links are right in the description box below. Now, as it is right now, based on what is going on the 1 hour time frame, the newly identified structure this morning is this beautiful descending trend line that we have here. And of course, we know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we continue to look out for patterns and structures that supports the idea of selling. Now, since the week began, the momentum has been very bearish. And as it is right now, based on following the character of price action during the Asian session, where we saw price consolidate and staying afloat above that support line, that initial support line at the $72.40 area, And with a little bit of a breakout right now, I'm of the opinion that we might be in for the next wave of bullish momentum anytime soon. And due to the current structures we have here, we have a buy stop order above the $73 level with the hopes that if price breaks out of the structure, taking out all the sell positions here, we will be in for a buying opportunity. And if price continues to climb to find new highs, we look out for more opportunities to buy at the breakout of the $73.50 level. So placing a buy stop order above the structures makes quite a lot of sense right now, especially as we have witnessed the breakout of that descending trend line. Now that the descending trend has been broken out of, there are still chances that price could come back and retest the structure, giving us more opportunities to maximize the potential of this bullish move. So if it so happens today that price action breaks out and it has already broken out of the structure, but we can't say it has broken out really at this point, as this current candle still has about 22 minutes for it to close. So let's see how the market will play out, and if a retest of the structure happens and continued buy pressure resumes around this area, well, this will be a beautiful opportunity to join an uptrend move. But if it doesn't come back and price continues to find new highs, breaking out of a $73 level, $73.50 area, we shall continue to add more buy positions to our existing trade. So that is how we are going to be looking out for buying opportunity. And my feeling, my instinct tells me that we are going to be buying this asset. In fact, the factors behind the scenes that is affecting this market is propelling everything towards the upside. But in case price drops to the downside and wants to continue a downtrend scenario, how do we intend to capitalize on that move? Well, at this point, and considering that price has just broken out of that descending trend line, I wouldn't be looking out for selling opportunities below the $72.40 anymore. Instead, I would like to see price action take out the lowest point for this week, which is exactly around the $71.40 level. Now, if you look at that structure closely, you will see how that same level had played a major role in pushing price to the upside in the past. Look at what happened here on Thursday. We saw buy pressure from that same area. We saw what happened here again on Tuesday of last week trading session, another buy pressure from that particular area. And yesterday, we saw another buy pressure coming in from that particular level again, giving us a clue of how strong buyers are at this particular point in time. Now, if I want to consider selling this asset, I would like to see price take out that support line and then break down, retest that structure to jump into any sell position at this point, which I doubt will happen. But if it does happen, we want to be on standby to capitalize on that move. So to help us position ourselves very well, we will be identifying that level. So we have the $71.40 level duly marked out. So you want to be doing the same too on your chart, as it will be guiding any selling potential from here. Now, let me mark this out on my chart, and then beautiful. So we have the $71.40 area. Now, if we are going to be waiting for price to drop into this area before selling, and looking at the distance between the descending trend line and where price action is right now, which is approximately 100 pips, I would like to see if I can capitalize on a bearish opportunity even before the breakdown of that support line happens, making me to be able to maximize the potential of this bullish move. And if I am going to be doing that, first of all, we would like to see price action drop back down within the seller's territory, that's below the descending trend line. And in fact, if price can drop below the descending trend line and I can see a couple of lower lows and lower highs right on my lower time frame right here, then I would like to be part of a bearish momentum even before the breakdown of the $71.40 level happens. And then if we can join earlier, have a sell stop below the $71.40 area to maximize the potential of the bearish move. I still doubt this is going to happen, but if it happens, we want to be on standby to capitalize on that move. And of course, I will definitely be with you on my social media platforms to give you updates as at when due. So as it is right now, we maintain a bullish bias unless we see significant factors that support the idea of selling this asset. So this is my simple view on the USOILSPOT for today. I hope I made myself clear. And in fact, if you have any questions whatsoever as regards to the setup, or you need some further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we shall be moving on to the next asset on our watch list. If you have found this session and content helpful so far, kindly support the project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them too. Thank you in advance for doing so. And I see a couple of comments here. Okay, I already saw your Jonah Aruna. Princess Habulokwe, good morning to you. Glad to have you around. I think this is your first time on the Forex Morning Mastery this year. Trust you're doing well, and thank you very much for checking in. I really appreciate that. All right, so in the absence of no questions, I do want to assume that we are all on the same page. And in that regard, I hope you've marked out those levels on your chart and position yourselves appropriately at those identified levels. So with that being said, let's move on to the next asset on our watch list for today. All right, so the next asset on our watch list for today is the USD/JPY, the newly included asset into our watch list after about 5 months of absence in this particular asset. And since the beginning of the week, this asset has really done very, very well. And in fact, we've seen how the US dollar has taken advantage of the ultra loose policy of the Bank of Japan in recent times, and continue to find new highs on this particular asset. So we currently have a minimum of 3 to 4 buy positions running in profit on this particular asset, and I do encourage us all to secure all position at this point by moving all stop losses accordingly. Remember, during the early hours of the week, after we'd monitored how participant in the market was reacting to our key level at the 144.800 area. Remember, our key level for the week was situated right around this area. If you had not watched my weekend video on the USD/JPY, please kindly do. The links are right in the description box of this current video you are watching. So check it out so you can see how we did identify this level and how this area had played a major role in determining the direction of price action in over a very long period of time. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, at the beginning of the week, we saw how price action was consolidating above the key level, and in fact, we saw how we saw price confined within the 145.240 and the 144.870 area to emphasize the level of indecision at that point in time. And usually whenever we have a range identified on our market structure like this, we exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And of course, we saw what happened yesterday. Price did break out of the resistance line to trigger buy positions, and we of course added more levels to maximize the potential of this bullish move. So we had levels like the 145.550, which we had a buy stop order above that structure. We also added one more level at the 145.800 to maximize the potential of this bullish move. And recently, price action just triggered the fourth position at the breakout of the 146.450 area, giving us a minimum of 3 to 4 positions running in profit. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. And of course, you know how we do it. When price moves significantly well in our favor, the next thing we want to be doing right now is to move all stop losses, secure the current positions while we wait for new opportunities to unfold. And based on what is going on right now, I'm of the opinion that anywhere around the 146.00 area seems most appropriate to move all stop losses to, anywhere around that area. And remember that we also want to be given enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our plans for today? And we can't be going into the details without taking a quick look at the economic features that happened. Today, the data from the Statistic Bureau of Japan revealed a notable growth in the producer price index, showcasing a 0.3% month-on-month increase in December, surpassing the 0.2% in November and beating the estimated 0%. On annual basis, the PPI remained steady in December, maintaining the previous month's 0.3% rise and surpassing anticipated 0.3% fall. Now, this tells us the PPI data is one of the key indicators of any economy that reveals the inflationary pressure of that economy. And of course, we know how the Bank of Japan has been running the ultra loose policy since it was over 2 years now they've been running this, and in fact it hasn't been favoring them when it comes to comparison with other assets, other major assets, especially the US dollar. And as a result of this, the US dollar are taking advantage of this ultra loose policy to ride a bullish momentum in that regard. Now, the Bank of Japan Governor Kazuo Ueda emphasized the crucial need to sustain the ultra loose monetary policy while awaiting additional data to gauge the persistence of inflation in the Japanese economy. Well, and he further emphasized that the central bank's commitment to abandon the negative rate when confident in achieving sustainable 2% inflation is still on the table, giving a little bit of hope for the Japanese yen. Now, if they are going to be negating the negative rate which they have been running, I think they are running about minus 0.1%, which is not very attractive compared to the US dollar, which is doing 5.25 return on yield investment. So if you have a US dollar, if you have a Japanese yen right now, you definitely want to be using it to buy a US dollar, which of course gives you a better ROI, return on investment. So, and this is why the US dollar has been very attractive against the Japanese yen, despite the recent expectation of a rate cut in the from the Federal Reserve. Now, as we navigate the current landscape, market participants will eagerly await the US New York Empire State Manufacturing Index, which is coming up later today, and of course wait for the speech from the Federal Reserve Christopher Wallace to give fresh impetus into this market. However, while they anticipate that event, we are looking at our key structures on the chart to guide our trading decisions. And one of the most important one I was able to spot here this morning is this beautiful ascending trend line, which has been supporting the bullish momentum since last week Friday. And if we connect the series of higher lows here, you see how we had the ascending trend line marked out, and you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying, and we shall not be considering selling only if price action does break down that ascending trend line. So as it is right now, price still remains above the ascending trend line, and of course we're looking out for more opportunities above the 146.450, and we shall continue to maintain the bullish bias to the upside. And in fact, if there are any new opportunities to add more positions to our existing trade, I will definitely give you updates on both my TradingView and Telegram platform on this one. So on the USD JPY, we maintain a bullish bias here, and the only condition that will make us want to consider selling a little bit is for price to breach this ascending trend line, retest it, and then we can start considering selling. And then remember, we have our key level at the 144.800, which could still serve as a demand zone to push price to the upside. And of course, it also shares a confluence with the key level we identified on the higher time frame. And in fact, if price can break down the structure, it could welcome more selling opportunities to the downside. So let's see how the market is going to play out in the next couple of hours. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the USD JPY. We maintain a bullish bias here, and that ascending trend line is going to play a key role in guiding our trading decisions for today. So I encourage us all to mark out this level, and most importantly, the ascending trend line, as we will be needing it to guide our independent trading decisions for today. If you have any questions as regards to my explanations, feel free to let me know in the comment section. And as usual, I will be taking the next 10 to 15 seconds off, see if there are any questions whatsoever before we move on to the final asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page, and all we've said so far has been quite comprehensive enough for us to take actions on. So with that being said, here we will be diving right into the last asset on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And in fact, we have quite an interesting situation going on at the moment after taking advantage of a sell position after price did break down, retested the $2,053 level to signal our first sell position for the week. And for those of us who were with me on the XAUUSD live window during the New York session yesterday, we already hinted this possibility that price may likely break down the $2,053 area after noticing how it has become difficult for buyers to break out of the resistant line of that range at the 2058. Now, a quick reminder to what we saw here at the beginning of the week. Let me emphasize here again, for those who are joining us for the first time, it's very important for you to watch my weekend videos on this asset, as it will give you a detailed top-down analysis on this particular asset, and of course have a better understanding into how we were able to identify the key levels, structures, and patterns that we are going to be using to guide our decisions for this week. So I encourage you to watch them. The links are right in the description box of this current video. So at the beginning of the week, it was a simple setup for us, though the market started on a strong bullish note, as we saw price action confined within the 2058 and the $2,046 area. However, the inability of buyers to confidently breakout of the 2058 was a concern, as we saw continued selling pressure since the beginning of the week around that particular area. And despite the strong bullish momentum that started the week, and we saw a higher low here, giving us signs that the momentum is gradually reducing. And remember that we have this ascending trend line spotted during our live session when we said we will be using it to guide any buying opportunity here as long as price remains above that structure. And look at that ascending trend line right here. During the New York session yesterday, we saw how price broke down the ascending trend line, giving us signals that we are likely going to be seeing price drop to the downside. And prior to the New York session yesterday, I did give an update on this asset, as I had to include the $2,053 area, which interestingly shares a beautiful confluence with that ascending trend line. And of course, that level had played a major role in negating all attempt by the sellers to break through that particular structure. So as a result of this, I was saying here that if price can break down both the ascending trend line and the $2,053 level, we shall be looking out for selling opportunity. And of course, we saw how price broke down, came back to retest the structure, giving us good confirmations to go bearish on this particular asset. And as it is right now, we have a minimum of 2 sell positions running in profit right now, while the first one is running with about, let's see, about 105 pips in profit. That's very good. And we have the second one running with approximately 35 pips in profit. And for those of you who did capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. And as it is right now, I want to be advising us to move our stop losses, secure the current sell position right now, as I still have a strong feeling that this asset has a tendency of going higher, and the current sell position we are seeing right now may be as a result of some profit taking activities, which reflects on the chart as a retracement move to the downside. And for those of you who watch my weekend video on the XAUUSD and of course the exclusive price action tutorial I normally share prior to the New York session, you will see I talked about the importance of a particular structure on the 4 hours time frame. And for the sake of clarity, I would like to share that with you quickly so we can have a better understanding into what is really going on here. Now, on the 4 hours time frame, we had a beautiful setup identified here where we noticed how since the beginning of the year, price action had consistently and uniformly found lower highs in this market, giving us this beautiful descending trend line you will see on the 4 hours time frame. Now, one thing about this descending trend line is, despite the strong bearish momentum since the beginning of the year, we saw how it became difficult for sellers to break through that area around the 2015 and the 2025 zone. And this level here had been a strong demand zone in the last 5 to 6 weeks in this market, as every attempt by the sellers to break through the structure has been met with strong resistance from the buyers. And because of this, I identified this level as a strong demand zone, serving as a platform that may probably find new highs in this market. And one interesting thing that happened on Friday of last week trading session was how, after price action coming into that demand zone, we saw some bullish momentum begin breaking out of our key level at a 2035, which interestingly shares a beautiful confluence with the descending trend line we spotted earlier. Now, we saw how price broke out of both of the structure on Friday to incite a bullish signal for us. And from a technical standpoint, we expect that at some point in time, price may come back to retest either the key level or the descending trend line that was broken to incite an uptrend continuation. And in fact, this descending trend line beautifully shares a confluence with that demand zone as well. So everything for me is still looking bullish, and in fact the bearish momentum we're seeing right now may be as a retracement of that impulsive leg we noticed last week Friday. Now, the right question to ask at this point is, how far will this retracement phase go before the next wave of bullish momentum will happen, or is it going to incite a massive sell-off to the downside? So we have levels and structures we will be using to gauge how far this retracement phase will go. Will it get to as far as the 2035 level before another wave of bullish momentum will happen, or will it go to as far as the trend line before another wave of bullish momentum will happen? So that is what we can decipher from the 4 hours time frame. Now, scaling back down into the 1 hour time frame, let's see what things are looking like here. Now, look at what is going on right now. Price action just broke down the $2,056.46 area, which of course we did identify this morning as an area to add more sell positions to our existing trade. However, before I emphasize the technical details on this asset, it's very important for us to know, while the US dollar has suddenly gained some traction, missed the expectations of a rate cut as early as the month of March. Presently, the downward pressure appears to be as a result of the improving US dollar, which was fueled by robust US bond yields, as we saw some significant uptick in the last 24 hours. Now, investors' confidence in the US dollar is staging a comeback, spurred by hawkish remarks by the Atlanta Federal Reserve President, that is Raphael Bostic, during the course of the weekend, where he suggested that potential inflation, using his own words, saying seesawing in the event of premature interest rate reduction, may contribute to this resurgence we're seeing here. And simultaneously, we cannot ignore the geopolitical turmoil in between the Israel and Gaza, which of course has spilled into the Red Sea, with the Iran-backed Houthi group persistently targeting maritime vessels despite the US and United Kingdom military strikes on their bases. Now, this development may shift the market sentiment from positive to risk aversion. That is, when I say risk aversion, I mean that participants in the market are willing to take more risk. Are willing to avoid risk, and by avoiding risk, what will happen? They tend to move to safe haven asset. So at this point in time, while the market participant continue to digest the latest development in the market, we are witnessing some profit-taking activities in this market, which is inciting this bearish momentum we are seeing right now. So it's very important for us to secure all sell positions, as we do not know when the market is going to shift to push price to the upside, though we have technical levels that we will be using to guide that. That is the 2035, and of course that descending trend line we identified on the higher time frame. So let's see how far this momentum is going to go. Will it get to as far as 2035? Let's see. Or will it break down, retest the structure into the trend line we identified on the 4 hours time frame before the next wave of bullish momentum will happen? Well, let's see how the market will play out. But in the meantime, we hold on to a bearish bias and continue to look out for more selling opportunities. And for those of us who had missed out on the breakdown of the structures, well, let's see if the market can do a retest of the structure at some point, where continued selling pressure around this area on our lower time frame will give us more opportunities to join the decline to the downside, and a breakdown retest of the 2035 will welcome more selling opportunities. So I want to reiterate here, the momentum in this market still look very bullish, and I'm seeing this bearish momentum as a temporary retracement in the build-up of the uptrend continuation. So we are only waiting to see how far this momentum will go before another wave of bullish momentum will happen. And in fact, if it turns out to be a massive sell-off, that is, if it breaks down the descending trend line we identified on the higher time frame, we definitely want to be part of that move as we ride it to the downside. So in the meantime, let's see how the market will play out, and if there's anything new on this asset, I will definitely give you an update on my TradingView and Telegram platform. And remember that we have the XAUUSD live session coming up later today during the New York session, and I already have the link right in the description, in the comment section below, pinned at the top. You want to click on that link, click on the notify me button so you can get notified as soon as we come online. And for those of you who do not know what this is all about, that is the XAUUSD live window. The XAUUSD live window is a platform that was born out of popular demand from market participant, from members of this community, where we come together on a daily basis to monitor real-time price action on the XAUUSD asset. So you want to be part of the session. It usually kickstarts 5 to 10 minutes into the New York session, and of course it lasts about 5 to 7 hours depending on the tenacity of the trading activity for that day. So let's see how this will play out, and trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So I hope I made myself clear on the XAUUSD, but if you have any questions whatsoever, feel free to let me know in the comment section. As always, I will take the next 5 seconds to see if there are any questions, and please, if you have found this content helpful and useful, kindly support the project, give the video a thumbs up. This is the cheapest way you can help support this channel to grow, and thank you very much as you do so. So let's see if we have any questions whatsoever, and then we shall go on to round off on today's Forex Morning Mastery session. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard we shall be rounding up for today's session. I really enjoyed every single moment. It has been a wonderful moment with you guys. The week has started fairly well for us all. We have some significant traction of the USD JPY, and we have something going on the XAUUSD, while we are looking for new setups to unfold on the USOILSPOT. We've had beautiful setups mapped out using our basic tools such as trend lines, key levels, and chart patterns, only to potentially and strategically position ourselves in such a way that we can capitalize on the next move. And I do hope you marked out these levels accordingly, and if you do, I encourage us all to exercise patience and allow the structures to mature before we jump into any positions. Please remember that every decision we make in the market is more or less an educated guess, and as a result of this, and with this basic understanding, you do want to be having a well-defined risk management strategy in place to mitigate against any risk, significant risk on your portfolio, and this will of course make you to be able to live to trade another day. For those who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today, and if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So once again, I look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for tomorrow's trading session. So it's on this note I'd want to wish us all the best of luck today, and looking forward to seeing you in the comment section of my TradingView Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful day, everyone. Bye bye.